Assalamualaikum, salam UITM article. My name is Nurliyana Batrisyia. I'm from BA2424B under the Faculty of Business Management. Today, I'm going to explain on this currency analysis between Australian dollars and Canadian dollars. The first primary indicator to be used is candlesticks. In the graph of Australian dollars versus the Canadian dollars, there are spinning top candlestick pattern. The spinning top pattern also appeared on the 28th May 2021, which indicates indecision, where investor cannot agree whether the price should rally or react. The pattern showed the sign of reversing from the downwards to upward, where it is expected for the investor to sell. There is small change in balance between supply and demand will tip the price trend on the other way around. Secondly, support and resistance. In the graph, it can be seen in between the 28th May 2021 and the 3rd June 2021. The orange line represents the first support line, while the purple line is the first resistance line, and blue line represents the second support line. Support line is the best time to buy the stock because the price is at the lowest point. On the other hand, resistance line is the best time to sell because the price of shares are expected to rise. On the 3rd June 2021, it is proved to be the second support line. The investor needs to take note that there will be an unexpected reversal happened. Therefore, it is the best time for the investor to buy the price. Next, simple moving average, DESM8. From the graph of Australian dollar versus Canadian dollars, the simple moving average can be seen on the 3rd June 2021, where we can see it is on the top and the trend has started to downtrend or downward. In this situation, I suggest that you should sell your price because the price moved toward the downtrend line from the bottom. But if it goes above the downtrend line, then you should buy it. The secondary indicator. As for the graph of Australian dollar versus Canadian dollar, the relative strength index, the RSI, the shares are trending where it is not overbought or oversell as the values are lower than 70 at 32.51 prices and higher than 30 in the 3rd June 2021. Thus, you can still buy or sell the price because RSI did not reach the phase of 70 and less than 30 yet, but it is preferable to buy it. Next is the moving average convergence divergence, MACD. It displayed at the red line. Based on the currency graph on the 26th May 2021, you should buy the price as there is a buy signal generated where the MACD line crossing from the bottom and crossing up to the signal line, and sell at the currency on the 3rd June where the signal line generate where line crossing from the up to the bottom signal line. Lastly, the volume. For Australian dollar versus the Canadian dollar on the 3rd June 2021, the price started to pick up on the downside. The activity shows an increase noticeably as the price started to decline and sell off and the volume started to pick up. This shows a bearish trend. The new low on light volume is less significant. As in conclusion, based on the graph, after the analysis of the primary and the second indicator, in my suggestion, I suggest that the investor to sell the currency, the price on the 2nd June 2021 at 0.93693 and buy at the 3rd June 2021, which on 0.92713, and can presume the chart is to be expected showing an uptrend. Thank you.